Yes, I was just saying that it's an honor and a privilege to be presenting this, partly because Zakah is a very um, close subject to me, simply because I've been working in the Zakah sector as an advisor for the last 5 years, and I see my day-to-day activities has been trying to implement the Zakat standard of AAOIFI. And so I see the need to talk about this topic and subject much more than other subjects, because the Sharia standard on Zakat is in between standards on Islamic finance, right? So if you look at the AAOIFI guidelines, the Sharia standard on Zakat is like literally in between all of them. But it's a unique standard, it's a unique subject, it's a unique topic, which requires implementation. It requires thought, it requires expertise, and it requires all of us as stakeholders to put our minds and heads together to really, try and develop this field much more. Because zakat, to be honest, zakat can literally have its own book. That's how deep the subject is, and therefore, it just given COVID in this era, given the different challenges we're facing globally, zakat is a pillar which is really the antithesis of riba, right? That's the way I consider zakat. Zakat is the polar opposite to riba. If you want to solve the problems of riba, developing and establishing and proliferating zakat management, calculation, distribution, management, collection will solve many of the issues that riba brings with it, because riba is a means of financing to the poor and needy, or those who have a need. They'll take interest-bearing loans. But zakah is given to those who are in debt, and zakah is advanced and extended to those who are in need. So zakah can be one huge stepping stone to solve the problem that we have with riba across the world. And that's one of the core objectives of any Islamic financial institution. So therefore, zakat is pivotal in the Islamic economy. Zakat cannot be overlooked or underappreciated. We have to give it its right and due. And therefore, this webinar is really touching on three things. I really want to highlight three areas based on the AAOIFI standards. The first is just discussing what is zakat. I think this discussion is really important because for too long, we've treated zakat like a charity, like sadaqah, and that has its consequences. Then the second area I want to highlight is the calculation rules as mentioned in the AAOIFI standards, and then considering debt deduction rules. And then we'll touch upon it towards the end, something on distribution. So this is really the overview of today. So if we move to the next slide, right, the question on what is zakah. Okay, if we can move on to the next slide, inshallah. Right. So the question of what is zakah, right? It really boils down to two principles. One is understanding its role within Islam, and then understanding its role within society. That will really highlight for us and make us appreciate the power, the objective of zakah, and its purpose as a pillar. Because every pillar of Islam has an objective and purpose. The Messenger of Allah, he told us in the hadith, Bunya al-Islam wala khams, that Islam is built on 5 pillars. The question arises that why did the Messenger of Allah mention this hadith and what's its relevance? Right? And we have to really think on this, because when we read the Quran and hadith, it shouldn't be just read at surface level. We should really stop, think, ponder, and ask ourselves that what learnings can we extract from here? So here the Messenger of Allah is giving us an analogy of Islam being a structure, a building, and its foundations are 5. Right? Iman, Salah, he said the Shahada, the Salah, the Zakat, the Sawm, and the Hajj. And so these are like the foundations of Islam. Bunyan Islam. Islam is built upon these 5. So these 5, he distinguished and differentiated from Islam. So then what does Islam mean, right, in this hadith? Because Islam doesn't mean these 5 per se, literally in this hadith. because he's saying Islam is something different. It's the structure and the foundation of these 5 pillars. That's why some of the scholars, for example, if you look in the commentaries such as Zakhiratul Uqba, a very famous scholar wrote this, recently passed away, rahimahullah. When he commentates on this hadith, he mentions that Islam up here means a generic subservience to Allah. It doesn't mean Islam in its technical sense. It means subservience to Allah. That's what it means. And therefore, he says that if we want to understand this hadith, Islam means overall subservience in all walks of life, economically, politically, spiritually, in the society, mentally, physically, every walk of life, in all areas of life. Islam is this building means subservience to Allah. So we want things to work in a just way, in a godly way, in a fair way, where there's no oppression, no injustice, people's rights are met, obligations are honored. And that's what really Islam is at this high level. It's this balance and justice. And so this hadith then is telling us that if we want Islam to be there, this structure which is upholding rights, obligations, honoring the people, fulfilling the needs of the poor, helping those who are weak, we need 5 pillars in society. We need Shahada, Salah, Zakah, Sawm and Hajj. And each pillar really plays a different function. And I don't want to go into the role of each pillar because that's a separate topic altogether. But the question is, what does zakat do? What does really zakat do in this philosophy that we're talking about? Zakat is the means of ensuring that everyone in the community and society's iman is upheld by their needs being upheld. Right? Zakat is not just about fulfilling material need. It's more than that. Material need is being fulfilled with a view of keeping the community together on Islam, within an Islamic community and an Islamic economy. That's the whole point. Why am I saying that? It's because, think about it, the classical scholars all mention that, apart from 1-2 scholars like Imam Zufar rahimahullah from the Hanafi school and others, majority, if not all scholars agree, which Ibn Mundhir rahimahullah and others have also mentioned on this, that zakat cannot be given to non-Muslims when they are poor. Why is that the case? And why is it given to Muslims? Why is the case of Iman there, the condition of Iman? Because it's directly related to a person's Iman. Why is وَالْمُؤَلَّفَةِ قُلُوبُهُمْ the 4th category of zakat, which is to bring people together? Why is that there? And the scholars mention, if you read Ibn Qudama al-Shara, if you read Nawawi, if you read the classical scholars, Al-Kasani rahimahullah and others, they all mention that these people are given either to bring them close to Iman in Islam or to save someone leaving Islam and Iman. So again, it's a relationship with Iman. And likewise, in activities of Gharimin, Fi Sabilillah, and all these different categories, there's always an element of Iman being discussed. So therefore, we learn that Zakah is not just for poverty alleviation for the sake of poverty alleviation, but it's with a view of bringing a community together within an Islamic economy for the, with subservience to Allah, and to uphold these ideals that we have in Islam of justice, of fairness, of honoring each other, maintaining rights, maintaining kinship, all these value systems that we have. It's about maintaining that. And that's where zakat fits in. It allows people to never fall short or leave this fold purely on the basis of not having enough. And rather, the beauty of zakah is it gives everyone within an Islamic economy a baseline income. Nobody should fall below this baseline in an Islamic economy. So it's almost like you could say like a universal welfare system, that nobody should have less than this money, or nobody should drop below. If they drop below, they'll be supported through zakah. Zakah gives opportunities to people. So zakah is, I generally and regularly, when describing zakah, I call it almost like a venture capital fund, because it really kickstarts people. It gives people a form of capital to become entrepreneurs. In fact, the classical scholars like Imam Shafi'i rahimahullah and the Shafi'i scholars, they mentioned this, that zakat should be given, one way to give zakat is in the form of income generating assets. Think about it, right? If you give somebody an income generating asset, for example, you give somebody a taxi as zakat, right? And yes, there was a difference of opinion. Can you give commodities and zakat in kind? AAOIFI and classical scholars agree that many of them do agree that you can do so. If you give a taxi to somebody, imagine he's poor or she's poor, but you give them a taxi to ride around and make money from it. That will make them self-sufficient, self-sustainable, and bring transformation in their lives. And imagine rolling out such a scheme to help the community. Of course, taxi is just one idea, but you can have different. Like I remember when I went to Malaysia, up there, many of the zakat authorities they were giving zakat grants and empowering people to farm the lands and empowering them in agriculture, empowering them in other ways. It's amazing. Okay, and likewise in the UK, a National Zakat Foundation, the UK, Netherlands, in Canada, Australia, these other countries I've been working with, they give zakat to pay for the funding of a course. So it unlocks their ability. So for example, if there's a person who's migrated to these countries, but all he needs is one qualification to be recognized in the society and community, then that zakat will be the difference in allowing him to be recognized as a professional in this community and society. Thereafter, it creates a huge change in his income. So zakat can play a massive role in unlocking potential. So that's why it's a third pillar in that sense. It's really upkeeping a community together. It's allowing, zakat, the view of zakat is nobody should leave this group or this community or this Islamic economy based on need and poverty. The Islam, Allah, His Deen, and the Muslims will always look after you and ensure that nobody drops below this line. The second point is zakat is not simply a charity. It's really important to understand that zakat is not sadaqah. Sadaqah and zakat are two different things. Sadaqah can be given when you want. It can be given how you want, to whom you want, whenever you want, as much as you want, as less as you want. That's sadaqah. Zakah is given to specific people. It's given or obliged once a year. It has specific rules on how it's paid, on when it's paid. There are recommendations and guidelines to whom it should be given and to where it should be given. So zakah is very different than to sadaqah. In fact, zakat was always managed by the government and the authorities. It was part of the public treasury until it was outsourced to the people. But then zakat was generally still considered to be a fund which is managed by, and it's still the case in many Islamic countries, that the government still has oversight of zakat. It might outsource the work to a third party, but it still has oversight. So zakat has always been this kind of separate, it's had this unique vision as opposed to sadaqah. Sadaqah is very spontaneous, very sporadic, and it can be atomized. Zakah has never been like that. So it's very important to understand that. Why? Because zakah should not be treated as a charity. It's part of our faith, it's an obligation, it's a pillar of Islam, and it has a specific role in developing the Islamic economy. Whereas sadaqah is used for developing the Islamic economy, but it's so much flexibility. Sadaqah can be done in so many ways, like waqf. And so these are all different avenues of developing, building the Islamic social finance, in developing the economy, in developing people. This is really investing in humans. When you talk about zakat, when you talk about sadaqah, when you talk about waqf, all of it really goes to supporting individuals, right? So if we move on to the next slide, now when we focus on some of the core points when it comes to calculation, very important to, as a preface to calculation, we have to understand that zakat can be paid, if you're talking about, so zakat can be paid by individuals, it can be paid by companies. And the AAOIFI standards very clearly discuss this, very thoroughly and deeply. So I would definitely recommend everybody after this webinar, because this webinar is a refresher, but to sit down with this standard And it's always helpful, a practice I do, and I know many IOFI fellows do as well. We have a regular reading of the Sharia standards. So it's always good to, once a week, once every 2 weeks, sit down for an hour or so and just read the IOFI standards, because that will keep your knowledge fresh, and it will definitely allow you to pick up points. Like, sometimes we forget, or sometimes, we're advising a client, we're advising a firm or a company, and they ask us a certain question, and it takes us long to think. But by reviewing the Sharia standards, it will make it easy for us to understand and remember that, yes, I've read your question, the answer is here, and this is the evidence for it. So it's a good practice to do so. So when it comes to zakat and calculation, before we go on to the calculation, zakat can be paid at company level. That can be done if it's in the Articles of Association, or if it's agreed by all the shareholders. Then the company can pay on behalf of the shareholders. It's not a problem. You can take out the funds from the shareholders' funds. That's absolutely fine. Otherwise, if no such agreement is done, then zakat will be paid individually. It will be an individual obligation. The shareholder, once he gets a dividend, or if profits are retained in the company and there's no dividend distribution, then a person should carry out their own calculation on this investment or shareholding within this company. So that's the first real point, that it can be done at company level, at fund level, or it can be done at an individual personal level. And when it's done at fund level or company level, it's usually taken care of by the Sharia advisor, the Sharia board, in conversation with the internal Sharia compliance team. Right? That's usually how it works. They are regularly in touch with the Sharia supervisory board, and they ensure that the obligation of zakat is correctly calculated and distributed. The second important point is that zakat is based on the balance sheet. That's what forms the basis of a zakat calculation, and not the P&L, not the profit and loss accounts, not the income statement. It's very important to understand that, because zakat is not technically on profit and loss. It's not technically on profit and loss. What I mean by that is a company might have a revenue of $1 billion, right? $1 billion, but it's made a loss, right, this year for whatever reason, financing, they had to write off a number of assets because of these unusual circumstances, and so it's made a loss at the end of the day, but it still has net value. It has assets there worth millions. So the question is, do you consider that the company made a loss in this financial year, or do you consider what it actually owns at present? Zakat is based on what the company owns, its assets, not on its revenue, on its income, on its profit, or on its loss. That's not what zakat is based on. That's just a running metric. But really, up here, zakat is based upon what a company owns or what an individual owns, and not really your salary per se, how much salary you're earning. Of course, that will feed into your calculation depending on how much is retained, but it's not the sole metric or reference for zakat calculation. So that's very important to understand. For a company, it's your balance sheet. For a fund, it's the portfolio of assets. For an individual, it's their own personal record of assets that they hold. And of course, it's not every asset. It's only particular assets. So moving on to the next slide. What are the conditions for obligation of zakat? See, zakat is not obligatory on everybody. Right? Zakat is not obligatory upon everybody. Zakat requires certain principles, certain obligations, just like salah, just like hajj. You don't go for hajj if you can't afford to go for hajj. If you can't travel, as an example, if a person can't walk, hajj will not be obligatory upon such a person. Likewise, fasting, if a person is terminally ill, they can't fast at all, they're very weak, then fasting will not be obligatory upon them. Same like salah, if a person is gone into a coma for 3 months, then the salah is waived off him for that period. So zakat has similar rules. These all pillars, they have certain principles before they become obligatory. And we could highlight the principles or conditions for obligations of zakat into 3. right? One is full ownership. What we mean by that, full ownership, and as elaborated in the Sharia standard, is a person should have exclusive authority, ownership, legal title, and the ability to use the funds. And he should have the ability to use the funds. What that means is, it doesn't mean that because your funds are in an investment and you can't use them, zakah is not due upon them. It doesn't mean that. The fact that it's in an investment, it is being used. Investments are generally the best form of usage when it comes to funds, because that will generate a return for you. So depending on the investment, the zakat ruling will differ, but that is a form of ownership, right? So a person should have ownership. It shouldn't be that your funds, as an example, are locked away in collateral, as a collateral, or you have an asset, a zakatable asset, which is a collateral for something. Like you have gold, but you've pledged it as a collateral, like what we call rahan or mortgage, right? For a certain debt, or you've lost your assets altogether and you have no idea where they are. That impacts your level of ownership. So you should have legal title. You should own the asset. It shouldn't be something purely in your custody, because if an item is in your custody and it doesn't belong to you, you are not responsible to pay zakat on that asset. So that's the first condition. Number two is the zakatable assets that you have, which we'll discuss shortly. It should be equal to or more than the nisab. Now, there's different ways across the world how nisab is used as a metric, and there's some variance in the precise amount in grams. The AAOIFI standards have taken the view of 85 grams, which is a very common view. Certain parts of the world might, have a slightly different view on grams, and that's of course 85 grams of gold and 595 grams of silver. And again, in the world, there's differences. Some countries will take the gold measure, some will take the silver measure. Why is there gold and silver? Very quickly, gold and silver is there because in the time of the Messenger of Allah sallallahu gold and silver were the currencies. At that time, the bimetallic currency was implemented. So people would use the dinar and the dirham to buy and sell. But in that time, 1 dinar would buy you 10 dirhams. There was a ratio of 1 to 10. And that's why when the Messenger of Allah told us of the nisab, he said 20 dinar or 200 dirham. That is the nisab from the hadith in Abu Dawood. But what this means is, if you go to the market with 1 dinar, or if you go to the market with 20 dirhams, or 10 dirhams, you will get exactly the same thing. The purchasing power of 1 dinar and 10 dirhams was identical. That's why there was a ratio of 1 to 10 between the two nisabs. Meaning, if in that time, if you use a gold nisab, or if you use the silver nisab, the outcome would be the same. The nisab was really the same in terms of its buying power, its purchasing power. However, today there's a great variance between the gold and silver price. Based on my calculation, maybe 1-2 years ago, when I was just researching this, I found a variance and a difference of 1 to 100 in terms of the gold to silver price. That's how much difference there is. So that's why in certain countries, if you use gold as a nisab today, nobody will have to pay zakat. And in other countries, if you use silver as a nisab, right, everyone will have to pay zakat, even though they're needy, right? So the world is very different with different metrics, different socio-economic profiles. So different countries, different scholars have encouraged different nisabs to be used depending on various concerns and various thoughts. So this is the second question, or second point, that your wealth, it must equal the nisab. Now, amongst the scholars, there's a difference of opinion and different approach. One approach is, as long as your wealth is equal to the nisab in the beginning of the year, that would activate you as a zakat payer, right? As a zakat, why I call like a zakat holder, he needs to pay zakat now. Well, then 1 year passes, and again at the year end of your zakat year, if you still have equal to nisab or above nisab, you will be obliged to pay zakat. This is one method that's used in many parts of the world to calculate zakat, where you just look at the the beginning of the year and the end of the year as 2 reference points. And as long as you have equal to or more than nisab, zakat will be obligatory. The other approach is zakat is obligatory as long as throughout the year, this entire period, this entire financial year or zakat year, you don't dip below the nisab. If you dip below the nisab, that cancels your whole and your year, and you restart once you reach the nisab again. So that's a different approach, and both approaches are valid based on classical schools of thought. So they're both valid and both are practiced. So that's just a summary of what makes zakat binding. Now, if we move to the next slide. So the question then arises, what do you pay zakat on? So the AAOIFI standards have categorized various zakatable assets, and it's done a beautiful job in the sense of outlining what's not zakatable, what is zakatable, right? So these are the very clear zakatable assets. One is cash and currencies. All forms of cash, whether it's e-money, whether it's paper money, whether it's coins, regardless of which currency, whether you have dollars, pounds, you have dirhams, dinars, reals, whichever form of currency you have, all of them are subject to zakat. Whether they are with you at home, you are hiding them somewhere, keeping them safe, they're in the bank, wherever they may be. If you have cash, even investment funds, if in an investment you have 2% cash, and this is very common. Many investment funds, Sharia compliant funds, would have a minimum amount of cash held, 1, 2, 3%, sometimes used for working capital, whatever it may be. Cash is held, that's or it's dividends or profits which have been accrued and held. There's always some element of cash. Okay, that is zakatable always. It's never a non-zakatable. And this is one of the philosophies of zakat, is that zakat is generally due on liquid, very liquid assets, and it's not on fixed assets. And the AAOIFI standards make this very clear as well, that zakat is not on fixed assets or on income generating assets. Zakat is due on liquid assets. And this is the nature of most of these assets, zakatable assets that's on the screen right now. They're very liquid, they're very easy to exchange. And some call them exchange assets because most of these assets are always exchanged and traded. The very purpose is you buy them to spend them or to use them. For example, cash, you don't hoard cash, you need to use and spend the cash. It's exchanged. Likewise, receivables, same thing, right? Gold and silver, considering gold and silver were currencies and have monetary features to some degree, they still retain that kind of ruling. Sukuk, same thing. Many of them, depending on the underlying asset, they have this exchange quality. Investment funds, you're buying and selling depending on what it is. And then trade assets, of course, your business stock. Again, the exchange assets. So, number one, cash and currencies, we've discussed this. Receivables, money which is owed to you, whether you've sold trade assets or you have, money owed to you because of a debt, okay, or you've given a loan to somebody. These are zakatable also. The treatment differs, of course, according to some scholars and schools. You'd only pay zakat once you receive the debt for that 1 year, whereas other schools differ and say no, that zakat is payable, like the AAOIFI standards mentions as well. Zakat is payable for all the years it was outstanding. So if you have receivables for trade assets, for example, you made a sale on murabaha basis, right, and it's on a credit basis, therefore, right, you have 10 years outstanding. Zakat will be due on the outstanding amount. And likewise for a loan that you've given to somebody, or a normal sale, like you made a credit sale, it's not murabaha, just a credit sale. Zakat will be due on the outstanding amount on the receivables. Likewise, gold and silver, another zakatable asset. Gold and silver are always zakatable, regardless where they are, whether and this is the view, of course, according to the Hanafi scholars, whereas the other scholars are of the view that gold and silver are only zakatable when, in a couple of scenarios. One, it's for investment purposes. Number two, it's in excess. It's not just a general wearing of a lady or of a sister. It's an excess. It's kept there. It's stored there. then the gold and silver will be zakatable. However, otherwise, for investment purposes, for trade purposes, gold and silver will always be zakatable according to everybody. So it's very important to understand that. Then talking about sukuk, right? The fourth asset was sukuk. Sukuk are very, I mean, if I remember correctly, the AAOIFI standards have 13, if not more, types of sukuk in the sukuk standard. Right? So if you look in the Sharia standard on sukuk, there's many different types of sukuk. Sukuk wakala, sukuk ijara, musharaka, sukuk murabaha, sukuk mudaraba, sukuk salam, sukuk al-mawsufa fi dhimma. These are all different types of sukuk which are outlined in the Sharia standard. Now, each sukuk mentioned in the Sharia standard of sukuk has a different zakat treatment. And the AAOIFI standards make this very clear that the sukuk will depend on the underlying assets. So, for example, imagine if you had a sukuk based on murabaha, sukuk murabaha. So, in that scenario, what's happening is the SPV taking the funds from the investors is buying an asset and on selling it to the obligor, as an example, right? In that scenario, because receivables are owed under sukuk murabaha, then zakah would be due on that full sukuk certificate amount or the outstanding amount that's there. If it's a sukuk istisna, as an example, where you are constructing, right? Sukuk istisna not being very common, but if it's a sukuk istisna, you are pooling funds together as investors, and then something is being constructed and leased to the obligor. Then in that scenario, because you're leasing fixed assets, zakat wouldn't be due on the portion relating to the fixed asset or the capital good of the building. Zakat will just be due on the income, the cash, the rental amount element. Likewise in sukuk ijara. In sukuk ijara, if you're financing by taking ownership of a building and then leasing it back to the issuer, the obligor, then in that scenario, zakat will only be due on the rental income, not on the assets pool in the sukuk ijara. So sukuk depend on the type of underlying asset, and every sukuk that's mentioned in the Sharia standard on sukuk will have a different zakat treatment, which is very important to be aware of. And of course, when it comes to sukuk, the Sharia advisors of sukuk would highlight this to investors when it comes to zakat treatment. Then number 5, investment funds. Investment funds come in all shapes and sizes, all legal constructs. So very simply, if you look at an investment fund, if you have equities, you have shares, and when I say investment fund, I'm including all forms of investments, whether it's equity, whether it's shares, whether it's venture capital, whether it's trust funds, whether it's private equity, mutual funds, ETFs. All of these have a zakat treatment, but it really follows the same kind of underlying principles as we discussed in sukuk. It just depends on the underlying assets. So if you have a fund which has, for example, it's a REIT fund, it's a real estate, right, fund. It's a REIT fund. In that scenario, because again your assets which are being held are property which are being leased, then in that scenario zakat is not due on the property ratio in the fund or in the investment. Rather, it's just due on your dividends or your rental income that you are receiving. That's what zakat is due upon, but not on the property itself. If you're trading in, for example, it's an equity fund, right? You buy and sell equities. Now, equities being very technical when it comes to, so the AAOIFI standards have advised that, and this is the ruling, that you should try to work out based on the balance sheet of equities the underlying zakatable assets or the net zakatable assets within a company. So looking at the balance sheets, yes, if it's just one equity, one share that you have, one company that you have invested in, it's quite easy and straightforward to work that up. For those in the financial sector, it's easy to read the balance sheet and understand the calculation and the zakat that's due. However, when we are talking about a fund with 50, 60 equities, right, then you can understand the difficulty in working out all those different equities. And this is something which I've been personally speaking with a number of scholars. The AAOIFI Shariah Standards mention that when it becomes difficult, a person should do his utmost to come to a conclusion, to guesstimate and make sure, speak to scholars, whoever, to try and get a fair value. And this is when you're not buying and selling equity, of course. If you are trading in equity in shares, where shares are bought to resell for capital gain purposes, then that falls on the trade assets. Up here, what we're talking about is when you invest as a long-term strategy, your investment is a long-term investment, where your goal is to generate value, but then rental income as well. It's just a store of wealth as opposed to being a trade. Then in that scenario, really you have to look at what the underlying assets are, and the AAOIFI guidelines are that you should try your best to work out as best as you can to guess and to make a reasonable judgment on the zakatable assets. We carried out the National Zakat Foundation. This is just some kind of practitioner's insight. What I did was, with a group of scholars, we reviewed the FTSE 100, and so all 100 companies we reviewed. We looked at the balance sheets of every single company, and we came to a conclusion that 66 companies out of the 100 had zakatable assets below 25%, and the other 34, were banks, tobacco companies, insurance companies, which are not compliant anyway. So we disregarded them, and then a minority as well. So the majority of FTSE 100 companies, when we reviewed this in 2018, they had net zakatable assets below 25%. So the guidance that we gave to people in the UK at the time was, if you use 25% for listed equities, it will cover your zakat liability. Because we've reviewed the FTSE 100, and there was no company which had more than 25% of net zakatable assets. So this is a really important research that needs to be done. I think it needs to be done for the S&P. It needs to be done for the different markets we have and the different investments. For inside Arabia, the Tadawul, all these different exchanges that we have, there needs to be some form of review and research done, which makes it easier for investors, for funds to really work out the zakat. And this is where there's a huge gap in the market. There's a huge gap where we, as all stakeholders with AAOIFI, we need to really increase it, because the issue is why it's so important is because zakat is an obligation, right? Zakat isn't just something we can guess or we can take lightly. It's an obligation. If we don't do it properly, we are falling short in our obligation and duty. And then secondly, the people who are in need of zakat, their need is being not met properly. If that's why, according to some estimates, there's various figures. One figure of the potential zakat goes from $500 billion US up to $1 trillion US. That's the potential in the world. But of course, not everybody's paying zakat. So it's really important we not only teach people about zakat, encourage about zakat, but also we ourselves calculate zakat properly. And then finally, is trade assets. Trade assets refers to your business stock, what you buy and sell. So you have a shop or a business, you have goods, right? Those goods are zakatable, and as according to the AAOIFI standards, at its retail price, the current market value that you're selling the item at. So I sell, as an example, laptops, and each laptop is £1,000. I will use that price. I will not use the cost price. Right? I will not use the cost price. I will use its retail price, determining the zakat amount due on these goods. So these are the key zakatable assets. Of course, there are other assets like animals, which the Sharia standard refers to, minerals, which the Sharia standard refers to. But just for the purpose of this presentation, I didn't want to go too much into that. Just thinking about the more common assets generally held across the world for everybody's benefit. So if we move on to the next slide, talking about debt and the treatment of debt and how they are deducted. So the first principle is debts from obtaining zakatable assets are deductible only, nothing else. Meaning, if I bought trade assets, I bought some stock on credit. I am a debtor. I'm a debtor. I owe the seller funds, money for this for this purchase. Right? I have an outstanding invoice. That debt then is deductible. So when it comes to my zakat calculation, I can deduct that debt. The AAOIFI standards of the view that if you have debts from non-zakatable assets, that would not be deductible. So for example, your personal goods, you bought, your personal mobile phone, or you bought a tablet or a house or whatever it may be, personal goods which are not zakatable assets, those debts you wouldn't deduct from your zakatable base and your zakat calculation. That's the first point. Second point is unlawful debt is not deductible. So if a person has an unlawful debt, what do we mean by that? If a person has taken finance and interest as an example, which we should never do, the whole point of AAOIFI is to develop, increase Islamic finance, to really help the entire world, because riba is not just a spiritual prohibition. And this is where many of us, we sometimes fail to really acknowledge this, that riba is not just a spiritual prohibition. Riba is prohibited because it impacts everybody in the world, Muslim, non-Muslim, in fact even animals, because the trickle effect of riba impacts everybody. It's a ripple effect. Riba, it has been universally prohibited. Riba has been prohibited in all the faiths, all Abrahamic faiths. This has been like a constant, a universal principle since the beginning of time, because of its severe harms to the economy. By harming the economy, you're harming everybody. Riba is a macroeconomic issue. It's really a systemic issue in that sense, where it can impact everybody. So this is why we have Islamic finance, and we have institutions like AAOIFI to ensure that riba is reduced as much as possible and moved away from as much as possible, because it's not in anybody's interest. It's not in the interest of Muslim or non-Muslim. Nobody's interest. Riba doesn't favor anybody in the long term. It has no benefit whatsoever. Rather, it's only harm. Then of course it brings the displeasure of Allah, and that's the greatest worry for us as Muslims. So therefore, any unlawful debt a person engages in, that is not deductible from his zakat calculation. Number 3, taxes that relate to the current period but during the next period can be deducted. Because a tax has been incurred, now is being incurred and accrued, therefore that can be deducted, although it may be payable in the next period. If a tax is not being accrued this period, it'll be accrued in the future, that cannot be deducted. So those are the simple principles when it comes to debt deductions for people, for businesses, and for even investment funds, and for anybody. The principles, underlying principles, are the same. There's much more elaboration in the Sharia standards on liabilities. We move on to the next slide. So, summarizing everything that we've discussed, zakat is due once a year on your zakat anniversary, your zakat year end, right? We mentioned that. The balance sheet forms the basis of your calculation, not the profit and loss account for a business. Zakat is not due on fixed assets, right? And this is something we highlighted, those assets which zakat is payable upon. Remember, we said cash and currencies. We talked about gold and silver. We talked about sukuk, certain sukuk, investment funds, receivables, right, and trade assets. We highlighted these. And there are some others like animals, certain minerals, so on and so forth. But beyond those assets, your personal house, your car that you drive, the phone that you have, the tablet that you have, the clothes that you wear, these are not zakatable in nature. These are not zakatable in nature. None of this is zakatable. Zakat is only due on what we've outlined. Yes, certain other items might come which may be potentially zakatable in the future if they share the properties. For example, sukuk, the way we have sukuk right now, it wasn't there before, but sukuk now has become an asset class in terms of zakat discussions, because it incorporates many traditional zakatable assets. So depending on where an asset may fit in the future, if it aligns with these principles, it could become zakatable. But Your personal assets like your house, your car, your clothes, this will never be zakatable. And that never forms part of your calculation. Number 4, zakat is not due on waqf, charity funds, and public funds because there's no owner. Remember, full ownership was a primary condition. We discussed in the very second slide that full ownership is a condition. So up here, waqf doesn't belong to the individual, rather now it goes into the ownership of Allah. And according to the waqf standard in the AAOIFI, the waqf has its own dhimma, has its own personal liability, right? It has its own juristic entity, and therefore it's different to the waqif, the one who made the waqf. Likewise, charity funds and public funds, they don't belong to us as individuals. They're for the common good of everybody. So zakah is not due on those assets held in such funds. Then finally, what's the calculation? After adding up all your assets, you deduct everything. It's 2.5% on your gold, silver, currencies, receivables, and trade assets. And wherever these are found in any investment, it's 2.5%. That's the ratio of zakat in the zakat amount on these assets. Yes, when you're talking about animals or when you're talking about crops, agricultural produce, there's different ratios. You have 10%, 7.5%, 5%, and this is elaborated and discussed in great detail in the AAOIFI Shariah Standards. Moving on to the next slide. So, as a summary, then this is the formula. This is the formula mentioned in the AAOIFI standards for us to really capture the entire calculation of zakat. Zakat equals assets minus liabilities. It's literally that. That's why zakat is almost like a balance sheet calculation, right? Just like a balance sheet has assets and liabilities, and that really gives you the current value of a company. Zakat is a balance sheet calculation in that sense. You take the zakatable assets, you deduct its liabilities. So the zakat base, the amount, how do you understand what zakat is due upon and the amount of zakat? You add up all the zakatable assets we've discussed, then you minus all of these liabilities payable during the financial year as of the date of the balance sheet, right? So all these different liabilities you can add, right? Meaning zakat will not be due upon those assets. All these other rights, there will be no zakat due upon them. And that will give you a zakat base, and that's what you pay zakat upon. Moving on. And that really brings us to the end of this webinar, just to give you a refresher on zakat and the importance. So I think of course we'll take questions, but my appeal to everybody is treat this as a refresher, as you just switch the light bulb on terms of zakat, but really sit down with the AAOIFI standard. That's the most beneficial thing. If you don't have the book, you can view the AAOIFI standards on the website. It's available in Arabic, it's available in English. You can read it, it's very beneficial. I would definitely encourage everybody to do that as the next activity on zakat. Jazakallah khair. Farhan?
Yes, thank you, Mufti Faraz Adam, for this enlightening session on one of the most important standards issued by AAOIFI. I'm sure this discussion has served as a good reminder of the main points of the philosophy and the rules of zakah for everyone. Now, may I ask, in fact, request you to please check your Q&A section and try to answer all the questions there's one by one. At the same time, I'll encourage all the attendees to continue posting their questions, but while at it, try to ensure that you're absolutely clear as to what exactly you want to be answered. Okay, so Mufti Faraz, if you can take over.
No, sure, Jazakallah khair. So the first question reads, would be nice to have an example of how to calculate the worth of a taxi, as in our example. I mean, like the market price of the car or the share of the tax company or the buying price, etc. So when we talk about the taxi example, that was in the context of giving a beneficiary the taxi as zakat. So that would be its value. So just say I have £1,000 of zakat to pay. I can use those £1,000 and buy its equivalent in a taxi, and then that would be my zakat being given. Of course, you have to be sure in this. You have to be very sure that the full value, 100% of your funds are transferred. You shouldn't be, I'm paying I'm paying for delivery with this £1,000 of zakah. I'm paying for, I have to pay some extra licenses, whatever. No, it should be the full amount of your zakat. It should be given to the beneficiary. So 100% of the funds are used for 100% of the car, which is then 100% delivered to the end beneficiary. And really the zakat, the taxi becomes your zakat per se. So that's how that works. So that's really done. Then it is the company itself subject to pay zakat. Yeah, I mean the company is subject to pay zakat depending on the shareholders who the way they do this. So there's different types of companies as we discussed. Some companies, if it's a public, if it's a waqf, if it's a charity, they would not have zakat. But if it's a limited company, it's a public company, or guaranteed by shares, whatever it may be, then in that scenario, the shareholders can decide amongst themselves the way they want to treat the funds for zakat purposes, whether they agree to pay from the company itself or whether they will deal with it individually. I hope the ownership ikhtilaf of pension plans will be discussed too, inshallah. I mean, see, with pensions, pensions differ from country to country in the way they work. My experience is more to do with the pensions really in the UK, the US, in Europe, where we have defined benefit schemes and defined contribution schemes and how they work. And there's difference of opinions. Our view and the view that's taken by the National Zakat Foundation is the zakat is due on defined contribution schemes according to your assets, underlying assets, but it's not due on defined benefit schemes. Right? That's the view that we hold, and that's my personal kind of inclination as well. Just being because a pension it's an investment. You do own the assets, but the reason why it's held for 55, 60, it's with a view of helping you post-retirement. Right? It's an investment. It's like any other investment, but with a view to supporting you post-retirement. But it is your money, and it's potentially the best form of wealth because it will help you once you retire, and will be a sizable amount. So that's and it's of course there's varying views, and scholars how they views, and we respect them. The next question is: do trade debt subject to zakah on both creditor and debtor, or just one of them? This is a very good question. So if we're talking about trade debt, me as a debtor, I have purchased something and the creditor has sold something. Now, I will, if it's, remember we discussed a liability, as a debtor, I will deduct. But I've bought assets, I've bought zakatable assets, I've bought some goods. I will pay zakat on the assets. So in my calculation, I will add the assets to my zakatable assets, but at the same time, I will deduct the price of this. So really it'll be netted out, unless, of course, there's a margin there where the cost price and the retail price is different. So I'll be paying zakat really just on the retail price, on the markup. For the creditor, he'll be paying zakat because it's receivables owed to him, so zakat will be due. Number 2, you've mentioned, does qard hasan subject to zakat on both debtor and creditor, or one of them? This is a very good question as well, because in this scenario, again, the same situation where the debtor and creditor, the debtor would deduct, right, depending on the objective of the financing and the qard, and the creditor would pay zakat. The creditor would be paying zakat. Do the prepayment subject to zakat? No, prepayments. Now, when it comes to prepayments, it's if you've paid already for a service, that would not fall for your zakat. So you've paid something in advance for a service, as an example. It's already been paid, it's been accounted for. That would not be subject to zakat. Who is responsible for collection and payment of zakat? Responsibility for collection and payment, again, this varies. Primarily, if you're in a Muslim country, you'll have your own top-down approach to zakat. Whereas when you're living in countries where Muslims are minorities per se, it's usually a bottom-up approach when it comes to zakat. So it's usually people on the ground have to really take this responsibility to develop a zakat system to ensure that this is correctly distributed. Can zakat be used for development and country infrastructure? There's a difference of opinion on that. The AAOIFI standards have not discussed this, and therefore I don't want to touch upon it here, but there are differing views where, for example, in Malaysia and Indonesia, the practices there might be different. Saudi Arabia, the practices might be different. The GCC might be different, and in the Western. So there's different scholars on either end. You're more than welcome to ask your local scholars on this subject. to get a better understanding. But the AAOIFI standards have not gone specifically. They do mention that it cannot be used for building and for like utilities and expenses. If it's purely paid for that, it cannot be used. AAOIFI does mention that, just as far as I recall, 99%. But when it comes to more specifics, development and this stuff, it's best just to ask your local scholars because there are nuances involved. Is there a agreed formula for zakat calculation? This is the most common formula that we've discussed in the presentation. Company employees have a commission on the profits company. However, they did not withdraw for 3 years and the company was using that money for business purposes. Who should pay zakat? I mean, I would address that to your local scholar just because it's, I believe there's more information needed, and without the full understanding of what's happened exactly, it would be unreasonable for me to just answer on that. Would cryptocurrencies fall under the normal currency illa according to today's AAOIFI standards? I mean, with crypto assets, it's not been discussed in the AAOIFI Shariah Standards, of course, because it's a very recent phenomenon, and there's a lot of work taking place in AAOIFI right now in reviewing and researching fintech. And inshallah, we hope that there's a Sharia standard that is issued and some guidance anyway on cryptocurrencies and crypto assets, and just understanding, which brings some form of awareness in the market and in the Islamic finance world on how to deal with these assets. Certain individual scholars might have their views. I mean, personally, I wouldn't say when it comes in a normal currency illa, there's a difference of opinion on that. But you can read online. There has papers have been written on currency. Like an ISRA are doing some research. The Sharia Advisory Council in Malaysia have written on cryptocurrencies, and certain individuals across the world in the GCC and even in the UK, in America, and other parts of the world. So do look into that. Companies also use market timing and issue debt simply to hold or increase the cash level. Consequently, the cash increases partially via debt. Consequently, the cash is not owned 100%. Therefore, how do you differentiate now pure cash when cash that is actually not owned? Again, zakat is based on wealth equity. I mean, it always depends on the underlying. What's the underlying at that current? Remember, zakat is a snapshot calculation. So at that particular moment in time, if they are increasing cash by debt, they're borrowing funds, then that becomes a liability. So it'll be treated like a liability according to the principles of liability, right? And if it's as you say, it's not actually owned, it just depends what's happening at that particular moment in time to really give a definitive answer. If an asset is given as a security, is it to be included in the zakatable assets? No. If an asset is given as a security, that is no longer zakatable, and the reason is because your ownership has decreased in the sense that you don't have the exclusivity or the authority to use the asset. Now it's become held by the security. It's held as a security with whoever is usually the creditor who's given you financing. What is the treatment of funds invested in Islamic banks and financial institutions? This is in view that funds invested in turn invest in both exchange assets, murabaha, as well as income generating assets. Yeah, in that scenario, it's a good question. If you've invested in an Islamic bank and they are practicing murabaha, so it's usually through a wakala. Many savings accounts work under wakala products. So the bank will be a wakil, your agent, and they will be conducting murabaha sales or ijara sales. You just need to know the proportion. How much is going into the murabaha side and how much is going to the ijara, and then you treat it accordingly. Zakat will be due upon the murabaha, of course, but not on the ijara element and the ijara portion. Does debt prevent zakat or reduce it? Yeah, so if you have a liability, as we discussed the different types of liabilities, depending on what the financing or debt is for, it can reduce or deduct your zakat base. If it's debt is procured and it's taken on to purchase something which is zakatable in nature, it will be deductible. Is provident fund amount in zakatable? Is provident fund zakatable? I mean, provident funds are, there's a lot which has been discussed on this. I would say because it's specific to a certain part of the world, I would say it's most wise to consult your local scholars. I just don't want to get it wrong because, to be honest, there's a lot of difference in that anyway, and I would say the best thing is to refer to your local scholars on this. Is investment in real estate company subject to zakah? When you invest in a real estate company, if the company is holding buildings and leasing them out, right? It's not buying and selling properties. It's not property development where building properties are bought and sold. Then zakat is only due on the cash element or the rental element in that company, not on the fixed assets, not on the property. But if properties are being bought to sold, then the properties will become trade assets and will be subject to zakat. What is the best method to assess the inventories? Market value, net realizable value, or fair value? I mean, they're all, to be honest, certain different funds take different assets. I've seen the net realizable value used, I've seen fair value used, I've seen market value used. It all depends on what it is. If it's a business, they usually use the market value, the retail value. If it's a fund, they use the net realizable value of the assets, right, or the fair value. That's what it's generally used. So it just depends on the structure in where the investment is made. Please share the presentation slides, especially the first part. Inshallah, we will do. And should we add VAT to the value of inventory? This is a very good question. To be honest, I've seen both views on this, right? Because see, VAT, my personal approach is that VAT should not be added simply because it's what's happening with VAT. It's not yours. You're just passing it on to the government. And that's it. If you work in the UK anyway, I'm talking about the UK system. You're charging VAT. You're paying VAT at one end to your supplier, and then you're charging VAT to your customer. So really, that money is being either netted, depending on now where you are in the cycle. That can be netted off, or it's literally that you have to transfer the full amount. So a liability is incurred as soon as you have charged VAT. It's something that's due, and therefore it's something which would automatically be payable. It's a payable. It's not something which you which belongs to you, and therefore VAT is, from my personal view, VAT is not zakatable in that sense because it's not yours anyway. For people who do add VAT and they pay zakat on the VAT on the full amount, including the 20% VAT, they'll be deducting it then as well on the other side. So there is that difference. While paying zakat, shouldn't money be paid in money, animals paid by animals? I mean, that's a difference of opinion. Scholars are of the view, many scholars are of the view that paying in cash is the most beneficial because it's the most liquid and it's the easiest way to obtain assets. If you pay zakat in an animal, as an example, then it's only useful for those in an economy where animals are easily used, traded, benefited from. So, for example, if I had a farm here in Europe, in the United Kingdom, I had a farm where I have a few animals, and they fulfill the zakat criteria, and therefore I have to pay zakat on the animals. Now, it'll be hard for me to go and find somebody to take the sheep, as an example, right? It'll be difficult. So, that has to be taken into consideration as well. A person has 3 apartments, flats. Every month he collects rentals from them while he does not have any other source of income. The question is, does he need to pay zakat on the value of the apartment's flats, or only the rentals if there is a surplus? So zakat is not due on the value of the apartments and flats. It'll be zakat will be potentially due upon his rental income if he meets the other criteria. For example, if he is above nisab, if it's there at year end, he'll pay 2.5%. If he doesn't have other debts, so these are all the different conditions that which will have to be considered when calculating zakat in that scenario. In a takaful company, can directors choose not to pay zakat for the shareholders, but choose to charge it for the participant fund? Again, that's something which the directors would, they would have discretion. But at the same time, it's important to understand in a takaful company the kind of the structure of the takaful company. Is it waqf? Is it wakala? Is it based on mudaraba? Is it a hybrid model? That would impact the zakat treatment of the fund. Can zakat be divided between 2 or more people instead of giving it to one person? Yes, you can give zakat to multiple people. So if I had £1,000, I can give £500 to one person, £500 to another person. That's absolutely fine. Zakat equals net asset according to your calculation. Net asset is, however, represented by shareholders fund. Which aspect of shareholders fund should be subject to zakat payment? Yeah, so when you talk about the shareholders fund up here, then in that scenario, remember what we're talking about is notice that you're talking about your net assets. That's what you're talking. So from a balance sheet perspective, you're looking at your assets, right? Your net assets. That is the zakatable amount. That's what you're looking at primarily because your liabilities and your equity will all equal the assets. It's equals out, right? It balances out. So you're looking at the assets really. That's where your key focus is. And then reserves and there's all this. The AAOIFI standards has discussed this in great detail. If you want to look in there for further information on this point. If it is a current and long-term portion of murabaha receivables, is zakat payable on current portion only of full amount? It's on the full amount. If an institution has paid zakat on the income applicable for zakat, but in subsequent period refunds the same through a policy change or regulation, shall the institution adjust the same with the next year? To be honest, I'm not really sure on this because I think the regulatory framework and the reason for what's happened is key to understand this question thoroughly. If it's a refund on, I'm not really sure what you mean by refund on this or changing policy. I think that would be better if you discuss that with your local scholars or the Sharia board of that fund to get further insight on this. In countries where company income taxes and personal income taxes are paid to the government, is zakat payment compulsory? Yes, it is. The obligation of income tax and personal income tax, they are used differently. Their ratios are different. Their objectives are different. Zakat has its own philosophy. It has its own goal, and it has its own criteria. So zakat should be paid. Can the tax paid be deducted from the zakat payable in order to reduce the effect on the company or individual? No. So remember, taxes can be deducted. So from your zakat base, you will deduct tax. That's how the two come together in the sense that if you had £1,000 tax, you had £2,000 net. You had £2,000 worth of assets. The £1,000 will be deducted from your calculation. The £1,000 will be deducted, and therefore you'll only have £1,000 payable. My question is regarding the zakat on investment in stocks and units or ethical funds. You said zakat is only applicable on investments on the short term, but as you are aware, due to liquid nature of the investment ability to convert to cash, it is difficult to guarantee that even the investment intended for long-term investment will remain to its maturity period. Hence, the type of investment is not considered while calculation of zakat, then where will there be? I mean, see, on this, it just depends on your intention. Have you bought to resell, or have you bought primarily to hold as a long-term investment? Like you're not entering the market with a view to flip the shares or to sell the shares. You're there. You're holding on as a long-term investment. That's your current strategy. So it's based upon your strategy, really, how you are entering the market and dealing. If the bank has a time deposit of $100 million for 5 years, out of which $10 million will be redeemed in 1 year and remaining during the next 4 years, what amount should be deducted from zakat? If the bank has a time deposit of $100 million for 5 years, out of which so in that scenario, look, you've received the cash, you've received $10 million, that will be added. If that remains with you till your zakat year end, you'll pay zakat on that anyway. You'll add that to your calculation, and then it depends. Now your 100 million in the bank deposit, if it stays as pure cash, whatever the net is of that, right? So you deduct the 10 million and the amount that's been redeemed. That if it stays as cash and sits as cash, that's zakatable. If it's a Sharia compliant investment in an Islamic bank, then it just depends what this 100 million is converted into, and that's what you consider for your zakat purposes. So it really then depends on the nature of the asset, whether it's a murabaha, whether it's an ijara, or whether it's involving commodity murabaha trading, whatever it may be. When you pay zakat on receivables for about 3 years and the company becomes bankrupt, how will it be treated? I mean, your zakat for the past 3 years have been paid for, right? If you're talking about your past treatment, that's been paid for. But then your current, bankruptcy, because remember, zakat is primarily due on individuals, right? Individuals are the ones. So if a company becomes bankrupt, me as a shareholder, I'll still do my own individual assessment. What's my personal stake at that time? Yes, the company was paying on behalf of the shareholders, but what's my personal kind of thing now in the company? If there's no assets, it's been completely absolved, it's been dissolved altogether, the company, then if there's no assets, it has liabilities, outstanding liabilities, then very unlikely there will be any zakat due from the company itself, but your personal kind of situation be reviewed independently. So with that, inshallah, we answered all the queries. Jazakallah khair. I hope that was beneficial. And sorry if I've not been able to answer any. I've tried to go through all of them, I would definitely recommend, if I've missed anything or anybody here wants more information, please do read the Sharia Standard number 35 in the AAOIFI standards for more insight into these questions and answers.